Okay, great.
Hi, gals. We'll get started in a minute. I'm just trying to get Cliff situated. My class ran over, so just just be with you in a moment.
Okay, hi everybody. Sorry for the delay. We had to just get things set up. We just had a little technical issues, but we are good now. So I hope everybody's doing well. Let me go in and pull this up. Okay, wonderful. All right, so I see Miss Lily, I see Allison. Hi, ladies. Thanks for joining
Hello.
today. We got a couple here in the classroom too. So, once again, just in case if you don't know who I am, I'm Cliff Cox. I'm the senior loan officer here with Cross Country Mortgage, and we've got some really cool things that are kind of coming out. We always seem to try to make sure that we're staying ahead of just all of the product details and what's going on in the marketplace and all those kinds of things. And it's just nice for us to kind of, just always be the front runners with that. And so I just really wanted to today was just to kind of go over a couple things. I'm not going to probably go over the whole plethora of programs and things like that, but just a couple things that I wanted to key on today that I thought may have been really pertinent for 2026. And we're going to start out with just some basic stuff with the basic programs, and then a couple cool things that CCM has, to offer and some updates. So I'm going to go in and share my screen. Start with, what do I want? Here we go. Okay. See if it'll let me go the full screen. All right. Well, you guys can see this on the TV. Okay, ladies online, can you see my screen? Okay, I just want to make sure you guys can see what I'm going over.
Yes, we can see it.
Okay, perfect. Okay, thank you. All right, so let's just kind of start with and go over what's going on in 2026, all of the new updates, because these are, just some really good information for you guys to know in regards to like loan sizes, product sizes, and and all those kinds of things. So I always like to make sure and kind of start with this. Um, so what's new in 2026? The new, here, hold on a second. So it's like I guess I should fix my typo, but ignore that. That's 20. That should be 2026. So the new conventional loan limit is now $832 and 832,750. So that's the new actual just conventional loan limit before we're even getting into jumbo. And what's unique about this, guys, is that the jumbo loan limits. Oh, just over time. I mean, I remember the max jumbo limit used to be 415. And now look at it. I mean, it's more than doubled, so because anything that was over the jumbo limits before had to go through all of the jumbo pricing and the jumbo, qualifications. So, what's kind of unique about this is that, the market and everything is changing. Um, all these updates and all these things that we're seeing now is just the testament to what's kind of going on. In our everyday market now in 2026 as opposed to 2006. There's been so much changes over the last 20 years. It's been unbelievable. Okay. All right. And another good bit of information to learn is for FHA loans. Now, FHA, I remember when the max FHA loan limit was 236,000, and now it's 500 for a single family unit. It is 541,287. And for like a duplex, a 2 unit FHA, max loan limit is $693,050. So lots of, just unique changes, guys, just I kind of wanted to go over. So to kind of keep these in mind when you have clients that are looking at properties, say for instance, you got a client that may not qualify for conventional financing, whether it would be credit score issues, debt to income ratio issues, all those kinds of things. FHA may be, a great option for them, because not only will they be able to maximize as far as the higher loan size, but the interest rates and everything due to any type of, credit issues or anything like that. Okay, so it's for FHA. And then for VA, the new loan limit for the state of Ohio is 832,750, which is up from 405 or 415, I believe, like 20 years ago. So everything is pretty much more than doubled. So very cool. Just some, good information to kind of hear about that. Okay. And then as we move on here, to the area median income increase for Stark County and Summit County. I just picked those two, because those seem to be most of the areas where most of us do business at. And so I wanted to kind of go over this information as well, just so you could understand that too. So the Fannie Mae Home Ready program, which is basically the first time home buyer program, which you can put as little as 3% down, conventional. If they fall in within the area, 80% of the area median income, they can qualify for not just the 3% down, but they may even qualify for our CCM Smart Start program. So the Stark County new 80% median income limit is 69,200, which is a little over 1% increase from last year, which is actually pretty good because last year's increase went up about 7% from the years prior to that. So this is all pretty good information. And then for Summit County, the 80% median income loan limit or income limit amount is $80,240, which is a little bit of about another 1% increase over last year. But prior to 2025, guys, like 2024, I mean, I think the area median income limit was about 60,000. And for Stark and for Summit County, I think it was like 71,000. So you can see the big jumps, for these particular programs and what, household people are making more money. They just need to start increasing these things because of cost of living and cost of goods, those kinds of things. So these are starting to follow in suit and allowing more clients to be able to qualify, just based off of that. So, good information. And like I mentioned here, I just put that note in here for our CCM Smart Start program. We can assist up to 2% of the purchase price. So 2% up to $4,000 is what we can contribute, which will help them, only have to come up with 1% and then, closing costs and things like that. But those kinds of things we can figure out. Okay, so that's just a quick basic overall programs for conventional FHA, VA, what's changing for 2026, what those kind of updates. Does anybody have any questions before we move on to the next item? Everybody good? Okay, girls, it seems like they're good. Okay, all right. So next, what I wanted to kind of discuss too, guys, is let's start with our new FHA solar panel, program. So now what this is FHA is allowing for solar panels to be financed in with a purchase. And not only does it allow that, it also allows, down payment assistance to help with the program as well. So this is something that's very unique, a little bit something that's kind of new. So just to kind of give you a little bit of information, we're excited to introduce our new FHA option that helps buyers stretch their budget and improve their home without adding any out-of-pocket costs. So through our new partnership with Arcasa, this is our new partner that merged with Cross Country to kind of help with this particular type of option now. Eligible borrowers can finance the cost of solar panels into a standard FHA loan and receive up to 5% in forgivable down payment assistance program. Okay, the key there is forgivable. It's not like, there's no time limit or anything like that, kind of like with OFA. So very, very cool. And that 5% can be applied towards down payment or closing costs. So we have a call a training call on January 29th at 1:30. So we're going to get some more information to get a little bit more details on here. But I just wanted to kind of go over some of the specifics because I think this is some really cool stuff. So it's going to be eligible in all the states. It's an FHA first mortgage, the down payment assistance, it's basically a 10-year, down payment assistance, and it's forgiven after 90 days. So as long as they're in the property for 90 days, it's going to be completely forgivable. And then they're allowed to get up to 3.5 and or up to 5% of the purchase price that can be used, towards their down payment, and closing costs. And so the underwriting, they must work with Arcata to complete the solar quote and welcome call just to kind of get all those specifics, just so they understand what they're doing and getting all those kind of things in. And, what they'll do is they'll answer the questions too, because, you're going to have buyers that are going to have questions. If I'm financing the cost of these solar panels into my property, how is that going to affect with, the value? Is my home going to appraise? Those kinds of things. So they go over all those kinds of details, during the whole process of, getting them pre-approved, letting them know about the program, and so they have a full understanding of what they're getting into. Okay. So good information on that in that regard. I just wanted to make sure and touch base on that. But I think this is really cool. It's, especially for, properties that, get a good amount of sun each year. I mean, I know Ohio, we get the snow and everything, but I still think, the sun is still out even when it's cold, and that's all it really needs for the solar's panels to, to kind of keep you charged. And from what I'm hearing, it's really efficient for, for properties once they get onto that. So just another tool that we have to add now, to our arsenal here to help your guys' clients, with anything that they may need. And what's nice about this too is, and I'm going to double check to make sure, but I don't, as long as they qualify for FHA, then they can qualify for this program. Because you know how some other down payment assistance programs that are available, like OFA, minimum credit score for FHA is 650. There's no credit score requirement for here. If this runs approved eligible, they can have a freaking 580, 550. If they get an approved eligible, they can qualify for this program. So that's really cool too. So that's just something to kind of think about, which I think may end up getting more buyers into homes, and not have to wait maybe so long for either credit repair, which I'm more than happy to help them with, all those kinds of things. But I think it'll definitely help with, getting some more buyers that just may not fit the normal conventional or, higher tier credit score bucket. Okay. So great information in regards to that. Okay. Any questions real quick on this new program for the solar panel product? I'll get some more information on this once we get our training and everything. I'll get more information out to you guys just in case if you have any questions. And I'm sure I'll do another topic like similar to this here in a few months just to kind of bring it back up to make sure. Okay. All right. So we're going to move on now to our fix and flip program. Now, this is the one that I was really kind of excited about, and I really wanted to kind of learn more about too. And I think this is going to be very beneficial for you and a lot of your clients. This is allowing, buyers now to, and investors really, to purchase properties and have the money to fix them up before they sell them. Okay. So what all this entails, like here's just some quick information. I'm actually going to pull up my other site and kind of go over a little bit more of the specifics, but here's some of the key points to this program. So help your clients fix and flip, one more financing option for real estate investors. With fix and flip, your clients can buy, renovate, then resell or rent, all using a short-term loan. So the minimum down payment, requirement is they say minimum as low as 10%. Loan terms are normally 6 to 36 months. Refinance options are available, after the fact. There's no prepayment penalty, which is great, which is most of these have prepayment penalties on them, but we're not going to have those on any of our products. And these relatively close within 7 to 21 days. So really quick, kind of turnaround time too. Okay. Now I'm going to flip over to my other screen here. Hold on one sec. I'm going to stop this one so I can pull up my internet version of this. So hold on one second. This should be it right here. Share. Okay. Okay. All right. So that's on the screen. So you guys can see that too. Okay. All right, ladies, I think you can see this. I think I just shared the right screen, so I'm going to kind of just go through some of the details now on this fix and flip program. Okay. The one of the companies I know we have Lima Capital, and then we also have Valerie Commercial. These are two investors that Cross Country has partnered with, for this particular program. And here we go. I'm just kind of give you some more details. So, what is a fix and flip loan? A fix and flip is a short-term mortgage that is used to purchase and renovate a residential property. Okay. Loan features. Some loan terms 12 to 24 months, interest only payments, typically, higher leverage up to 85% loan to cost. Now, what that means is loan to cost is a little bit different than like loan to value. So they basically, because the loan to value would be, like 70%. Loan to cost is 85%. So basically the cost of the renovations plus the cost of the property. So that's what they're talking about when you're talking loan to cost.
Includes the renovation.
Correct. Yeah, that's a little bit different than just loan to value, which is like how much you're putting down, like what the equity is. This is a different kind of a calculation. Okay. All right. Oh, wait, here, let me go somewhere these details too. So fast closings, streamlined underwriting takes normally, like I mentioned, pretty much, be 6 to 21 days. This is their model. They're saying 7 to 14. Loan amounts from 75, 1,000 to, $2 million. So they're flexible with like loan sizes too. Okay. And then who are fix and flip loans for? Clients for fix and flips funding are entity-based real estate investors. It's ideal for real estate investors with construction experience or strong contractor relationships. So they target property markets, are generally urban and suburban areas with high market potential. Loan benefits. Okay, our fix and flip loan is fast, flexible, and simple. One loan covers your purchase and renovation. Interest-only payments mean you can manage your cash flow, efficiently, and we work with your timeline. So, just to kind of give you some more information on what Valerie, what they do. So, why Valerie Commercial Fix and Flip? Treat us as your valued partner. We understand the pressure to secure reliable financing, so we move quickly to underwrite and close your loan in as few as 10 days with over 30 years experience. And obviously, this is great to have that partner like this with Cross Country with our platform as far as mortgages and products. This was kind of like a perfect fit in regards to what they can do for us. So great information, that we have on here. And then they're supposed to be letting us know. I know we have our corporate meeting here at the end of the month also, and they'll let us know when this is going to be officially like rolled out. But here's our other one through Lima Capital. This is just kind of like in our guidelines that I'm kind of looking for. Like they didn't open all of it yet because it's just not 100% rolled out yet. But I know for sure we're going to be able to roll this out once it does, and it's going to be a pretty good thing. So let me just read. I want to see what this Lima Capital, Lima One Capital, that's our other investor that's going to be able to do these. That'll do all states except for Alaska, North Dakota, South Dakota, and Vermont for right now. So, but we're fine because we're here in Ohio. But let me see this once this pulls up. Okay. I'm gonna get some of the details real quick on this one to see how much different Lima is. Come on. Is this all enable editing? This is why it's just there we go. Why is this all grayed out? Okay. Okay, come on.
Clicking lines.
No, it's like I'm not even clicking on. Yeah. So, all right, let me scroll down. Let me see if I get some information, a little bit more details on this, because I know there's no. Trying to think if this is maybe some of our SOP, type of stuff. So I don't think there's all right. So I'll get more details on this, guys, too, once I know we officially have this rolled out. But at least as far as the basic information, I wanted to make sure and get that out to you. You know, that this is what the kind of the typical, kind of product that it's going to be, is that it's a short-term type of loan, no prepayment penalty, and we're going to be able to, and this is enough loan for you to use this to help with all the renovations. So great, great information on all that kind of stuff. All right, so let me stop sharing this screen. All right, and let me go back to my other one just to go over the updates. Okay. And as you guys know, probably from before when we were talking about it, but our CCM Smart Start program, I always like to just kind of touch base on this because it's just, it's literally free money. And with going back to the income limits, for the 80% area to moderate income limits for Stark and Summit County, there's going to be a lot of clients that may be able to fit this mold that meet the between 3 to 5% down purchase, program, and we're going to give them 2% of it. So up to $4,000. So that's a pretty nice, you know, um, added bonus. And what's nice about this is like there's no requirements either. You could sell the house in 6 months if you wanted to and not have to pay it back. This is a true grant gift that Cross Country as a company offers, for clients that can qualify for this. So very cool. It's not like, like I mentioned, like with OFA, where you have to be in a property 7 years, or if you're an essential worker, 5 years. None of that kind of stuff. This is a true grant towards you, or a true gift of cash towards your closing costs that they can qualify for. Okay. All right. So here's some basic overview, in regards to that program. So based on Fannie's Home Ready and Freddie Mac's Home Possible, the CCM Smart Start program provides 2% of the purchase price towards the down payment assistance, up to $4,000 towards, and all funds are provided by CCM. So when we go through the system, we always check and see if it's, if we get good findings through Fannie or Freddie to run it to see which one, because it's just those are the only two conventional marketing partners that are with for mortgage and underwriting guidelines. It's just those two. There's no others. Product terms, 30-year, 15, 30, 20, 15-year, 10-year fix. They meet all those requirements too. So it's not like a client, if they want to be a first-time home buyer and they don't want to do a 30-year fixed mortgage, that's totally fine. They don't have to. So it's just most of the time they do because, they want the payment as low as possible. But it's just nice to have that flexibility if they don't want to, if they choose not to do that. As far as like overlays, there's not really too many overlays. The biggest thing is when it comes to, like condos, the condos need to be warrantable condos and approved. The property, this is just for purchase only. Any cash back, the down payment must be lowered. It must be just go towards, their principal reduction, because they can't get cash back at closing. So that's really, really one of the only stipulations. And then just one of the occupying borrowers, which is a nice thing here. Only one of them has to be a first-time home buyer. So if you got two people buying a house, say for instance, maybe one had purchased a property before on his own, him or her own, and then got married, and then the spouse was a first-time home buyer, they would qualify. So those kinds of things. So that's what's kind of nice in regards to, having that.
So if one qualifies, they both.
Mhm. Yep, exactly. That's correct. So, and so basically the minimum borrower contribution is only 1%. So the program works between 3 to 5% down. If they put more than that down, there's no down payment assistance. So that's really the only requirement is 3 to 5% down for the CCM Smart Start program. Underwriting guidelines, we follow everything, through Fannie and Freddie, we don't have any extra overlays in regards to once we run it in the findings, whatever they tell us is what we need between W-2s, pay stubs, tax returns, all those kinds of things. We meet all those requirements. They sign off on it right away. That's what's nice too, is they go off of our underwriting and our turn times since this is a CCM product. So we don't have to wait for it to be reviewed by another partner. We do all of this in-house.
System.
Correct. Yep. This is cross-country mortgages fund, so it's what's nice. We don't our timeline is stays in our normal kind of a fast pace. Just as I mentioned before, at least one borrower occupying must be a first-time home buyer. The non-occupant borrowers are permitted to a maximum of 95% combined loan to value or loan to value. So, occupant borrowers may not own any additional properties at closing because they have to be first-time home buyers. Minimum contribution is 1% of the purchase price. And then obviously the qualifying income must meet the 80% of the area median income requirements. One thing is that they do want borrowers to kind of go through is just the home ownership education. But this stuff is really, really cool. I mean, and it's really quick. So they just want to make sure that they, go over all of these kinds of information because it just gives them really good tips of how being a homeowner is all about. So it goes over, what kinds of things to look for, checking with, appliances, utilities, what things to expect if something goes wrong, all those kinds of things. It's just really informative and educational especially for first-time home buyers who've never bought a house before, just to kind of go through this particular program. But it's really informational and relatively quick, but it's very useful. That's one of the requirements for the program. Okay, mortgage insurance, they still meet. That's what's nice too, is the MI companies that are approved for the Smart Start program are ARC, MGIC, Radian, Essent, and National, and Enact. With all of those are already in our system, and they know if it's a home ready product or a home possible for Freddie, anything that in regards to the mortgage insurance has to go under a different calculation because if they meet that area to moderate income, that PMI calculation is going to be a little bit different than it would be for a borrower that's just putting 5% down that doesn't meet these requirements. So it's an extra calculation for them. So to have lower MI too, that's another benefit of being approved for the Fannie Home Ready programs. So very, very cool. Anything we can do to save. Okay. And the amount of the down payment assistance will depend on the borrower's total qualifying income. Like we mentioned, is one thing here that I just want to make sure and let everybody know is that the DPA programs can't be stacked. So they can't use like a down payment assistance program from one source, like if they want to use like a community one or an OFA, something like that. You can, excuse me, you can only use one. So most of the time this is the one because not only if they qualify for the CCM Smart Start program and we give them this money to help, how because OFA's interest rates are a little bit higher when you start getting some of those down payment assistance programs. So they get the market rate plus the money. So it's in essence, if it makes sense, um, getting this particular program may be a better option than OFA because it doesn't have the requirements as far as having long to live in the property. And it also goes off of market rate pricing, not the rate that's set by OFA. So, I mean, OFA rates are normally pretty good. I mean, their interest rate without receiving any down payment assistance is normally pretty stellar. But once you start to get into getting, down payment assistance, the rate's going to be up a little bit more. So this is a nice option to kind of look into if OFA is not the option. And then this is all encompass data entry, that kind of stuff. All right. So in regards to, what's new, just a recap, loan limits, all those things are great now and informative that you guys need to know for all of your buyers and all of your sellers, all this information. I can send all this information to you if you guys want it, just to kind of have it as a reference, all that kind of stuff. We have our new solar program, which I think is going to be, it could be a game changer for certain families, especially, if, since this really kind of helps with their down payment programs and all that. And so, and assistance, any kind of cash to closing, especially if they just don't have it and they may have some credit issues. Like I said, if they qualify for FHA, they'll qualify for this program. So this could be something that, could be very beneficial for them as well. And then our fix and flip. I think this is going to be probably the biggest hit, in regards to, 2026. especially for, clients that they know they don't have to use all their own money all the time to fix up their property and then hope they get it all out, you know? So this is, I think, is going to be, a great option for this to, for investors to really kind of take advantage of. But I'll keep everybody posted once I know this is officially rolled out. I just wanted to make sure and let everybody know and be aware of this program, because I think it's going to be a real big hit. But any questions? That's pretty much all I really wanted to cover today. I didn't want to, but there's a couple of things that I want to go over, but it'll probably be one of my next classes. I know this is just I've thrown a lot at you. I didn't want it to be too overwhelming and too much information at once. It's nice to have a couple of things and just talk about it. And so, any questions on anything that we discussed today, any of the programs, what they do, what you qualify for, or how I can say how you qualify for, or anything like that?
Fix and flips be ready to be announced at fall.
Well, I know we're going to check. I think when we have our meeting on I think it's the 29th. Is it next Friday? Yeah. So next Friday we have a corporate meeting. And so once we have that, they're supposed to announce when this particular program is going to be launched, when it's live and we're ready to go. So hopefully I'll have an update by next Friday.
So is it okay to get people geared up for it?
Yeah, for sure. You can say, hey, I've got my lender that, that has this particular program that's for fix and flips. He'll call you once it's ready to go and we'll give him all the details on it. Absolutely. I would say spread the word, spread the buzz about it, because once this really kind of gets going, I think it's really going to take off fast.
Can you information regarding the programs?
Yeah, this I can send right now because this was already allowable for me to create in my Total Expert system, which has this, just the basic details. So you'll see all this on here. It even has it, I already had it marketed to me. So this is what I was able to kind of create in my system already. So I can send this out to you guys if you want it, no problem. Just text me, let me know. I'll get this over to you so at least you have some kind of point of sale. And then when that officially rolls out, I'll get more of the details and go over the qualifications with the buyers. Okay, but yeah, this I can absolutely send out now. Okay. All right. So Miss Lily, Miss Allison, any questions, anything from you guys? If you feel free to unmute and ask me anything you need.
I don't have anything at this time. Thank you.
Okay, you guys are good?
Yep.
Okay, wonderful. Well, thank you guys, so much for joining. I'm really looking forward to our next classes. There's a couple other topics that I'm gonna, kind of explore over the next couple of weeks and just really put out a really nice platform of just different things to kind of talk about and teach on, throughout the 2026 calendar year. So, stay tuned for some more, incredible things and a lot of great things coming up, and we'll keep you posted about everything. So thank you guys so much for taking the time to join today, and we will see you soon, and definitely call me if you have any questions. All right, guys. You're good. Thanks.